Good morning, everybody. Joe Ciaccio here. Happy Monday to everybody. What I'm going to start doing probably once a month is kind of pick 2 or 3 carriers for me to bring to your attention on some of the reasons why you should write them. And a lot of times the carriers I'm going to bring to your attention are ones that you should write for numerous reasons. Now, I've said this before, and it's probably one of the hardest things for an agent or even a new agent when they go into a home and the client tells you they don't have much money, they're on a tight budget, and they don't know if they can afford to buy anything. So what ends up happening is that now we start deviating from answering or asking the health questions and or listening to the answers. The only thing on our mind is to give them the cheapest product that's out there. Is anything wrong with giving your client the cheapest product? Not at all. The problem is that when you give them the cheapest product that's out there and you do not properly underwrite the client, because normally the less expensive carriers have a little bit tougher underwriting, you get it either declined or you write immediate, but it comes back as a graded or modified. Now the price that you've gone over with them is so low, to come back and get them approved with a regular carrier that's not quite as inexpensive, they're going to sit and say they want to think about it because it's too expensive. This is what happens. We get excited. We're going through our rate calculator, we're putting in male 65, non-smoker 15,000. The rate comes up and the rate, let's say, is $89. And you see one that's cheaper, $82, $80. Now, I'm going to tell you, it's hard to give them an $89 one when you have one for $80 or $82. Does that happen? Yeah, it does. It does. But here's the deal. You, the agent, are the only one who is seeing that privy information in your rate calculator. The client's not seeing there's something else out there. The clients don't sit and say, well, let me go out and investigate on the internet to see what's cheaper out there. They're using you as the person who's going to get them the best program. Just because you give somebody a program that's a little bit more expensive, that does not mean you're doing them something wrong. In this business here, it's a 3-legged stool, I was told a long, long time ago. It's got to be good for the client, their budget. It's got to be good for you, the agent, to get paid. But most importantly, it's got to be great for the carrier to sit and say, your client has been approved. When you go with a carrier that is not Social Security, premium drafting availability, you're hurting yourself. 3 carriers I'm going to speak about today all have the Social Security premium drafting availability. Let me tell you what that is real quick. Then I'm going to get on to the carriers. When you write somebody that's on Social Security or on disability with a carrier that offers that feature, you are guaranteed your client will be drafted on that specific day. If you write them with a carrier that does not offer that benefit, your client would be drafted a day or 2 days later. Joe, I've never had that problem before. Well, you probably have come across clients who may have a little bit extra money in their account. When you tell the insurance company to draft on the 1st or the 3rd, they will draft on the 1st or the 3rd unless those 2 dates fall on a Saturday or Sunday. Our clients get their money on Friday, so these carriers will draft on a Friday to where you do not get a chargeback. The carriers that do not offer the Social Security premium drafting billing will send it in on Monday and it'll come out on Tuesday, and there's a 75% chance your client will not have that money in their account for their life insurance. So what happens now is that you need to go back and visit them, go with them a different carrier, and you get a chargeback. You may not be able to get a hold of the client. Client may say, oh, never mind, I don't want it anyway. So when you offer something that costs a little bit more, it's kind of like a little bit of an insurance policy for you that the client will be drafted on the specific date that you want. Second, third, fourth Wednesday. Their money goes in midnight, 1 o'clock. The computer already knows there is a premium draft coming out of their account, and that draft is waiting on their deposit to come in. So once their deposit comes in, the account is told, release that money to the carrier to where you don't have a chargeback. When you look at it in the scheme of life, you're not hurting the client, because what you are doing is that you're protecting them by giving them a program that's going to be in place through the times where the money may not come in on Monday, it comes in on Friday, and the money's not there to take care of your premium payment. Now, today I'm going to talk about 3 carriers: American Amicable, GTL, and Prosperity. I'm going to kind of go quick. There's a carriers in their niches in the back office for you guys. Go to the agent sales manual, go down halfway, and you're going to see everything I'm reading right now. American Amicable has a 50 to 85. They also have one 0 to 49. Whenever you deal with something that is 0 to 49, a standalone for the younger folks, the applications are normally a little bit harder. So if you got a client that is 30, 28, 42, you want to go with a carrier that starts off at 18 and goes all the way, because you're getting simplified issue underwriting for your client that is under the age of 50. AMN is 50 to 85. They have an e-app with the instant decision right there in the house. They do the Social Security premium billing. And the nice thing about AMN is you do not need a Social Security number. If you have a TIN number, a tax identification number, you can still write your client and get it issued. They'll take a nitro patch or pill if your client was prescribed that over 2 years ago. I'm not going to go through the entire process. They have heart attack, stroke, almost like every other carrier. They also have 2 non-med term products with living benefits. The one that's the least expensive is their Term Made Simple, yet there's a 10-year look back. So if you get a person that's 25, 30, 40 years old, hopefully they've never had cancer or heart attack or stroke, be a great fit, very inexpensive. They even have a 20 and 30-year return of premium plan. Return of premium means in term life, you make your premium payments for 20 or the 30-year period that you sign up for, and you live. At that time, you get all your premiums back, depending on the company, maybe minus the service charges. Now, the nice thing is that they have a child and grandchild rider, and they also have a nursing home waiver. So if you ride a client of yours with American Amicable, and they go into a nursing home, they're there for 90 days. From that point on, as long as they're confined to a qualified nursing home, it can't be like the person who lives next door to them, a qualified nursing home, they'll get their premium payments waived until they get out, or God forbid they pass away. Okay, let's go to the next one. Let's go to Prosperity. Prosperity is only 50 to 80. Spoke to home office yesterday. They have a prime term now, which is a 20-year term, which is very, very, very lenient in underwriting. I was told they're coming out with a new term product that's supposed to be sexier than that one there, to where we can make some more applications for people who insist on having a term, yet want simplified underwriting. With Prosperity, you do need E&O insurance. They have an e-app with instant decision. I was riding with an agent 4 or 5 months ago, went to a client's house, and the client was on oxycodones. The client was on it for a while. There was a drop-down box. I don't recall exactly what was in there because the agent was doing the application. And they asked him a couple questions about the purpose, the need, and the reason why the client takes that particular medication. Boop, went through with no problems. That is the nicest thing about Prosperity. When there's a dual medication or dual use for a medication, be a drop box, you fill in the answer that is correct, and you can get it approved. Some carriers that have a dual process medication, the carrier automatically goes with the bad stuff. Okay, they automatically go with the worst case scenario. This is the best example I can give you, the medication called Coreg, and is generic called Carvedilol. That medication is primarily used years ago by specialists for people who have heart issues. When you combine those two medications with a water pill such as furosemide, some carriers don't even want it. So you need to go to the cheat sheet to look and see what carriers will write that client for you. Continue on. They have a non-smoker and smoker rate as everybody. Prosperity says if your client smokes cigarettes, okay, they're going to get a smoker rate. If your client does dip, chew, a pipe, cigar, they are considered non-smokers. So everybody from today on that you go visit who smokes a little mini cigar, pipes, cigars, whatever, you can give them a non-smoker rate and cut your competition out. Very nice when somebody already has a policy with your competition, come back in, move theirs out, move yours in for a lower rate. They have an immediate issue and they have a graded. Both of those pay the same commission. Premiums are higher on the graded, yet whatever your commission is on the immediate, you can get the exact same commission on the graded. And it's the same commission from 50 all the way to age 80. There's not a hit. Some carriers go 50 to 70, 70 to 75, 76 to 80, etc. Prosperity says we want your business, we're priced right, we're going to give you the same exact commission across the board. This is the best part about Prosperity, other than being a simple carrier. If you write $20,000 of issued business per quarter, they will give you an 8% bonus on top of your commission. So just for simplicity, let's say you write $20,000. You just barely make it $20,000 within quarter 1, 2, 3, or 4. This is for the term business and their simplified issue whole life. They're going to send you a check for $1,600. Okay? $20,000 times 8% is $1,600 on top of whatever commission you're making. Some agents like writing them because of the simplicity, the drop-down box, and they unlock that $1,600 to go to pay for their leads to help them out every week. Okay, I said they have a term. Now they're coming out with a brand new term. Okay, that's it on them. Let's go to GTL, the last one we're going to talk about today. GTL raised their minimum age from 40, now it's 50. So GTL is Guaranteed Trust Life. We use them primarily for their almost guaranteed product. They also have a hospital indemnity plan as well as a cancer plan that some agents use that in connection with a Medicare Advantage plan. They go to the hospital, they go to the emergency room, they're going to get money. GTL ages 50 to 90. There's 5 health questions. Now they're a little bit long, but it's only 5 health questions. If somebody has AIDS, somebody's got on oxygen, somebody that's from the hospital in a nursing home, those ones off the top of my head, you cannot offer it to them. Anybody else, you can give them this program here. When you go to your drop down for your rate calculator, you've got the immediate, the graded modified, the guaranteed, et cetera, et cetera. You go to the modified graded, and it's going to pop in there showing you the rates for GTL. Here's the nice part about GTL. When you go write a person a guaranteed issue, it's 99% return of premium for the first 2 years plus 10% interest if you pass away within that first 2 years. So if the client has a policy, they pass away in the 14th month, they're going to get all their money back plus 10%. AIG, Gerber, Great Western. GTL puts a twist to it. They have a little spin to it. If you pass away of natural causes in year 1, you're going to get back all your money plus 5%. Hold on. 5%. If you pass away in the second year, the 13th month through the 24th month, your client's going to get 50% of their face amount. So if you write that client a policy for $15,000, $20,000, they're either going to get $7,500 or $10,000 in year 2, and then year 3 for all of them is 100% of the face value. All these carriers have an e-app with instant decision. The 3 carriers I mentioned today, American Amicable, Prosperity, and GTL, also have the Social Security premium billing, where your premium will be drafted on the correct day to prevent you from getting chargebacks. The only one of these 3 you need E&O is for Prosperity. E&O is something I've had for a long time. If you don't have it, you don't want it, I understand. Yet, I think it's very good to have, kind of like it's an insurance policy for you, in case you say something incorrect, something misconstrued, somebody's in the house, they said you said this, you said no I didn't. It kind of gives you peace of mind that if you even make a mistake, you've got some type of protection to help you out. So, American Amicable, Prosperity, GTL we spoke about today. Everything we have is in the back office for you to go through everything we spoke about today. Get the applications, look at them. I think you'll be happy and satisfied adding them to your portfolio if you don't have them. If you need them, you want to discuss more, call the office. We're here for you. Make it a great Monday. Make some good money. And we love you guys. Make it a great day. Bye-bye.